Welcome to today's Explainer. Look, today we're basically putting on our futurist hats and stepping into the shoes of economic analysts to really peer into tomorrow. For any economic students or future experts tuning in, consider this a deep dive into exactly where our financial systems are inevitably heading. And we're not just talking about the next shiny tech gadget here. We're focusing on a fundamental, ground-up restructuring of human society. We are literally on the threshold of moving from the era of classic management and manual labor right into the age of what we call predictive management. It's a reality where artificial intelligence doesn't just react to the market, it mathematically anticipates every single need before that need even exists. So what actually happens to jobs when machines can predict every single market shift? That is the million-dollar question, and it instantly raises the stakes of our whole analysis. I mean, just imagine a reality where human intuition and forecasting is completely replaced by absolute algorithmic precision. We really have to think about the psychological toll this takes on workers. Think about that total loss of control over your own daily tasks when both global and local decisions are just made by machines. That traditional sense of engagement, autonomy, and professional worth, it just vanishes. It brings up a really deep philosophical and economic question. How do we even define our social role if both complex analytics and physical labor are run by predictive models? It honestly calls into question the whole purpose of humans in the economy.
All right, let's look at part one, the paradigm shift, expanding the predictive power.
Now, we already know AI is incredibly effective at predicting natural disasters, right? These algorithms have learned to crunch colossal amounts of physical data to warn us about physical cataclysms. Well, those exact same predictive superpowers are making a massive leap right into forecasting economic volatility. The analogy here is super direct and honestly a bit mind-blowing. Algorithms are now trying to predict stock market fluctuations, supply chain disruptions, or sudden shifts in consumer demand with the exact same mathematical precision they use to forecast hurricane. And we absolutely have to look at how this impacts long-term investment strategies. Because if the market suddenly becomes entirely transparent and predictable, well, traditional risk assessment models become totally obsolete. Investors are going to have to completely rebuild their portfolios, relying not on historical trends, but on machine forecasts that can literally see the economic future years in advance.
Moving on to part two, let's ground this in the practical world, finance and labor.
You can see the evolution happening step by step. First, the algorithms master the chaos of nature. Then, they take those predictive patterns and slap them right onto financial markets. And the end result? The very nature of human labor is fundamentally transformed. Just compare classic management to this new predictive management. In the classic model, human managers make decisions based on past experience, fragmented data, and a good old-fashioned gut feeling. But predictive management, it just mathematically calculates the optimal future scenarios. We're already seeing this happen in massive corporations. Logistics giants are optimizing delivery routes before traffic jams even happen, and massive retailers are stocking up warehouses before a customer even realizes they want to buy something. The human role in that entire chain is just rapidly shrinking down to nothing.
And guys, this isn't sci-fi. This is actively colliding with our financial reality right now. We really need to analyze the massive risks to the financial sector as it transitions to these predictive models. Like, what happens if the system crashes? We have to be aware of the critical risk of system failures when we are totally dependent on algorithms. Just one algorithmic hallucination or a single misinterpreted signal could trigger a cascading chain reaction, a literal flash crash of the markets that humans wouldn't even have time to stop. Plus, there are massive ethical problems when it comes to managing global resources through AI. Who are we actually trusting to distribute wealth? And who takes the blame if an algorithm makes a choice that is mathematically flawless but socially devastating just to protect corporate assets?
Which brings us right back here. If machines can predict the shifts, what is the role of the worker? It's a massive puzzle that the next generation of economists has to solve. We're looking at a radical shift in our social roles as we abandon manual and even routine cognitive labor. If people are completely pushed out of the production process, that old standard of working to survive just totally falls apart. And that is exactly why economists are increasingly talking about universal basic income, or UBI, as the inevitable answer to full automation. If algorithms are out there generating the bulk of the GDP, UBI might literally be the only mechanism to prevent mass poverty. It could allow people to finally focus on creativity, science, and social connection, basically redefining what it even means to be a useful member of society.
So, we are looking at a future economy with incredibly high stakes. Analysts generally point to three likely scenarios for a fully automated world. Scenario one is a post-scarcity utopia, where AI just perfectly and fairly distributes resources, freeing humanity from want. Scenario two is a bit darker, techno-feudalism. That's where the corporations who own the algorithms hold absolute power and wealth. And the third scenario is just transitional chaos, massive unemployment and social upheaval. And when we look at developing economies, the risks are huge. Countries that relied on cheap manual labor as a competitive edge could just get completely tossed out of the global economic system. Oh, and we can't forget energy security. The computing power required to run planetary-scale predictive models eats up colossal amounts of energy. That alone could spark brand new geopolitical crises just over access to power resources.
So are we prepared for the post-AI economy? To wrap up our analysis, let's lay out the key takeaways for preparing future specialists. Our education systems need to pivot immediately to focus on the skills that algorithms just can't replicate yet. Things like strategic empathy, complex interdisciplinary ethics, and systemic imagination. It's so important to teach leaders how to adapt their business processes to this fully automated labor force. They're going to have to build and manage hybrid teams where the decisions made by AI are actually filtered through human values, rather than just blindly executed. Look, this fundamental shift is already happening right under our feet. Understanding this dynamic is step one to finding your place in a future that's incredibly high risk, but absolutely full of potential. Thanks for joining me on this deep dive.